There are three confirmed money rules seniors should watch as July 2026 begins, but the most important detail is not a secret check, and it is not a bonus for every retiree. It is one simple question: which rule actually applies to you? One change begins on July 1st, 2026, and it may matter if you have Medicare drug coverage and you are trying to access certain weight loss medicines. Another July update affects Medicaid protections for married couples when one spouse needs nursing home care or certain long-term services. A third money issue affects many older taxpayers because a new senior deduction can change how some people file their federal tax return. So today, we are going to separate the real updates from the online noise. We will cover which July date matters, which notice or record you should check, who is affected, who is not affected, and one mistake that could cost you time, money, or peace of mind. And please stay with this, because one of these updates may sound helpful at first, but it has limits that many people can easily miss. The main answer is this: the July 2026 senior money story is really about three separate government areas. Medicare has a temporary GLP-1 bridge beginning July 1st, 2026, for certain eligible Part D beneficiaries. Medicaid has July 1st spousal impoverishment figures that may affect how much income a spouse at home can keep when the other spouse needs long-term care. And the IRS has a new enhanced deduction for seniors that applies for tax years 2025 through 2028 if you meet the rules. Those three things do not all help the same person. They do not all pay money directly into your bank account. And they do not mean every senior gets a larger Social Security check. That is the first thing to understand before you believe a headline, a phone call, or a video comment. Think of these updates like three separate folders on a kitchen table. One folder says Medicare drug costs. One folder says Medicaid long-term care rules. One folder says federal taxes. Your job is not to grab every folder and panic. Your job is to open the folder that fits your life. Let us start with the Medicare folder, because July 1st is the clear date here. Medicare is starting a temporary program called the Medicare GLP-1 Bridge. This program is for certain people with Medicare Part D drug coverage who meet specific health rules. It is connected to certain GLP-1 medicines used for chronic weight management. Under this temporary program, eligible people may have a $50 monthly copayment for certain covered GLP-1 drugs. But here's the limit many people may miss. This is not open to every Medicare beneficiary. It is not automatic for every person who wants the medicine. And it is not the same as saying every GLP-1 medicine is now covered for every use. The program has eligibility rules. A prescriber may need to send a prescription and complete a prior authorization. Prior authorization means the planner program must review certain medical information before coverage is approved. It is like a gate at a parking lot. Having a car does not mean the gate opens. The gate opens only when the correct pass is shown. The Medicare information also says eligible people may receive a letter if the drug is covered under the program. That letter matters. Do not ignore mail from Medicare, your Part D plan, or the pharmacy connected to the process. A small notice can explain whether you are covered, whether more information is needed, or whether your doctor must send something else. The next money change is the Medicare drug cost rule that continues in 2026. For Part D covered drugs, the out-of-pocket cap is $2,100 in 2026. After a person reaches that cap for covered Part D drugs, they generally pay $0 for covered Part D drugs for the rest of that year. That sounds broad, but it still depends on the medicine being covered and counted under the Part D rules. It also does not mean your premium disappears. It does not mean every medicine in the world is free. And it does not mean every cost at the pharmacy counts the same way. There is also the Medicare Prescription Payment Plan. This plan can spread covered drug costs across the calendar year. It can help some people manage monthly bills, but it does not lower the total cost. It is more like taking one large grocery bill and spreading it over several smaller payments. The total groceries are the same. The timing of the payment is different. Now let us open the Medicaid folder. Medicaid rules can be confusing because Medicaid is partly federal and partly state-run. That means exact rules can differ depending on where you live. But there is one July detail that matters for married seniors and families dealing with long-term care. The government updates certain spousal impoverishment standards. These rules are meant to protect a spouse who still lives at home when the other spouse is in a nursing facility or needs certain long-term care services. Without these protections, one spouse's care needs could quickly drain the couple's money and leave the spouse at home with too little income. Starting July 1st, 2026, the minimum monthly maintenance needs allowance is updated. In most states, the minimum amount is $2,705. Alaska and Hawaii have higher amounts because their cost rules are different. The same 2026 spousal impoverishment chart also lists a maximum monthly maintenance needs allowance of $4,066.50. But not every figure in the chart starts on July 1st. These numbers may matter when a state decides how much income can be set aside for the spouse at home. This does not mean Medicaid gives every married senior that amount as a new payment. It means the amount can be used in the Medicaid calculation. It may help determine how much income the spouse at home is allowed to keep. There are also resource rules. A resource usually means things like money in accounts or certain assets that can be counted. For 2026, the Community Spouse Resource Allowance has a minimum and a maximum. These amounts may affect how much the spouse at home can keep, while the other spouse qualifies for Medicaid long-term care coverage. This is where families should slow down. Do not move money, give away property, or change account names just because someone online said it is safe. Medicaid has look-back rules and state rules. A transfer that seems simple can create a penalty or delay. Before making big financial moves, families should contact the state Medicaid agency, an area agency on aging, or a qualified elder law professional. Now let us open the IRS folder. The IRS has a new enhanced deduction for seniors. It applies for tax years 2025 through 2028. If you are age 65 or older by the last day of the tax year, you may qualify for an additional $6,000 deduction. If you are married filing jointly and both spouses qualify, the total can be $12,000. But this deduction has income limits. It starts to phase out when modified adjusted gross income is over $75,000 for a single filer or over $150,000 for a married couple filing jointly. Married people generally must file jointly to claim it. You also need the required Social Security number information. This IRS deduction is not a July start payment. It is a tax year rule that seniors should prepare for before filing. The overlooked item here is the tax form line. The IRS has updated forms and instructions so taxpayers can claim this deduction correctly. Many older adults focus only on whether Social Security is taxable. But the bigger mistake in 2026 filing may be missing the senior deduction rules, or assuming you qualify when your income or filing status says something different. This deduction is not a refund by itself. A deduction lowers taxable income. If your tax is already very low, the effect may be smaller. If your income is higher, the phase-out may reduce or remove the benefit. So be careful with any claim that says every senior is getting the same amount back from the IRS. That is not how a deduction works, so who should pay the closest attention? First, people with Medicare Part D who use, or may soon need, a GLP-1 medication should review the July 1st Medicare Bridge rules. This is especially important if your doctor believes you meet the medical requirements and your medication is one of the drugs included in the temporary program. Second, married couples should pay close attention if one spouse is already in a nursing home, may soon need nursing home care, or may need home and community-based long-term services. The Medicaid spousal rules may affect what the spouse at home can keep. Third, taxpayers age 65 and older should pay attention before filing. This includes retirees who still work part-time, people with pension income, people with investment income, and married couples where one or both spouses are 65 or older. Fourth, people who still receive paper checks for federal benefits should review their payment method. Federal benefit payments have moved strongly toward electronic payments. For Social Security and similar benefits, direct deposit or a direct express card is usually the safer path. Paper checks can be lost, stolen, delayed, or returned. Who is not directly affected? A senior without Medicare. Part D is not affected by the Part D GLP-1 Bridge in the same way. A single person not dealing with Medicaid long-term care may not need the spousal impoverishment rules right now. A younger taxpayer under 65 does not qualify for the senior deduction, and a person already using direct deposit may not need to change their payment method, although they should still check that the bank information is correct. Let us look at a simple example. Imagine a woman named Linda. This is only an example. Linda is 71. She has Medicare Part D. She also helps her husband Robert, who may need nursing home care later this year. Linda hears online that July brings 3 new senior money changes. At first, she thinks every change must apply to her. Then she slows down and checks each folder. For Medicare, Linda asks her doctor whether the GLP-1 Bridge applies to her situation. Her doctor explains that eligibility depends on the exact medical rules, the medication, and the prior authorization process. Linda learns not to assume coverage until the official process confirms it. For Medicaid, Linda contacts her state Medicaid office before moving any money. She learns that spousal protections may help a spouse at home, but the state must calculate income and resources under its rules. She also learns that giving money away could create problems. For taxes, Linda checks whether she and Robert can claim the senior deduction. They are both over 65, but their filing status and income still matter. They keep their tax documents, review the updated form instructions, and consider free tax help if they are unsure. Linda does not receive a magic check from all 3 rules, but she avoids 3 common mistakes. She does not ignore a Medicare notice, she does not move assets blindly before a Medicaid application, and she does not file taxes without checking the senior deduction. That is the real value of these July updates. The value is not panic. The value is knowing which door to open. Here's what you can do next. Step 1. Put your situation into the right folder. Ask yourself whether your main issue is Medicare drug coverage, Medicaid long-term care, federal taxes, or federal payment delivery. Do not treat all government updates as one big rule. The agency matters. Medicare, Medicaid, the IRS, and Social Security handle different things. Step 2. Check the official notice or record connected to your issue. For Medicare drug coverage, watch for letters from Medicare, your drug plan, your doctor, or the pharmacy process. For Medicaid, keep your bank statements, income records, marriage records, and care-related documents organized. For taxes, gather your Social Security tax form, pension statements, wage forms, interest forms, and any tax documents you receive. For Social Security payments, check whether your benefit is going to the correct direct deposit account or direct express card. Step 3. Match the date to the rule. July 1st, 2026 matters for the Medicare GLP-1 Bridge and for the updated Medicaid minimum monthly maintenance needs allowance. But the senior tax deduction is tied to the tax year, not just one July payment date. Social Security benefit payment dates still depend on the type of benefit and, for many retirees, the day of the month you were born. Step 4. Do not assume a maximum amount is your amount. The Medicare drug cap, the Medicaid spousal allowance, and the senior deduction all have limits and conditions. A cap is not a payment. An allowance is not always a check. A deduction is not the same as a guaranteed refund. Step 5. Save proof before you act. Keep copies of letters, forms, benefit notices, tax documents, pharmacy letters, and Medicaid communications. If you speak with an agency by phone, write down the date, the time, and the general answer you received. Do not put your Social Security number, bank details, Medicare number, or tax information in YouTube comments. Step 6. Get help from the correct place when the issue is personal. Medicare questions can go through Medicare, your plan, or official counseling programs. Medicaid questions should go through your state Medicaid office or qualified local help. Tax questions can go through the IRS, free tax programs for eligible seniors, or a qualified tax professional. If your family is facing nursing home costs, personal advice can be very important before any asset transfer. You may be wondering, what if I do not use computers? You still have options. Many agencies have phone support. Some seniors can get in-person help through local offices, senior centers, state health insurance assistance programs, area agencies on aging, or free tax help programs. A trusted family member can help you organize papers, but do not give anyone passwords unless you fully trust them and understand what they can access. You may also wonder, what if I already receive benefits? That is exactly why you should check notices carefully. Receiving a benefit does not mean every new rule applies automatically. It also does not mean you should ignore mail. Sometimes a notice asks for action. Sometimes it only explains a change. The safest habit is to read it, save it, and confirm with the official agency if you do not understand it. What if English is not your first language? Do not guess on an important form. Ask for language assistance from the agency when available. Bring a trusted person to help you understand, but do not let anyone pressure you to sign something you cannot read. Before the final recap, there is one serious warning. Scammers love confusing benefit updates. They may call and say they can get you the senior deduction early. They may claim they can unlock a Medicare drug benefit for a fee. They may say your Medicaid application will be approved if you move money to them. They may pretend to be Social Security, Medicare, the IRS, or a state Medicaid worker. Be careful with anyone who asks for gift cards, crypto, wire transfers, account passwords, or payment to claim a government deduction. The IRS does not require you to enroll through a private caller to claim the senior deduction. Medicare does not need a stranger on social media to process your personal information, and Social Security will not ask for gift cards to protect your check. The safe rule is simple. Start with the official agency. Do not click random links from text messages. Do not give private numbers in comments. Do not let fear rush you into sharing your bank information. There are still limits and unknowns. Medicare coverage depends on the exact drug, the program rules, and medical eligibility. Medicaid rules depend heavily on your state and your family situation. Tax results depend on filing status, income, age, and the final return you file. Federal payment changes can also include hardship exceptions, but those must be handled through the proper Treasury process. So, here is the final message. The July 2026 Senior Money Update is real, but it is not one single payment for everyone. The three key areas are Medicare drug access through the temporary GLP-1 Bridge, Medicaid spousal protections for certain long-term care situations, and the IRS senior deduction for eligible taxpayers age 65 and older. The most useful action today is to identify which folder fits your life. If you use Medicare Part D and take or need a GLP-1 medicine, check the coverage process and any letter you receive. If your family may face nursing home or long-term care costs, check Medicaid spousal rules before moving assets. If you are 65 or older, review the senior deduction before filing your federal tax return. And remember the safety warning. No real government benefit requires you to pay a stranger with gift cards, crypto, or wire transfers. Do not share private numbers in comments, texts, or calls from people you did not contact first. If this video helped you understand the July 2026 changes, share it with someone who may be affected. Subscribe to Us a Life Bulletin and turn on notifications for clear USA updates on Social Security, Medicare, Medicaid, taxes, benefits, retirement money, and important government rules.